Welcome to Smart Stock Watch. Today is November 20th, 2025, and we're diving into the latest earnings report from ROST Stores. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's great to be here to discuss ROST Stores' impressive third quarter performance.
Absolutely. ROST Stores has just released their Q3 2025 earnings report, and it seems like they have exceeded expectations. Let's get into the details. Revenue and profitability overview. Let's start with the top line. ROST Stores reported a revenue of $5.6 billion for the third quarter, which is a 10% increase compared to last year. John, can you elaborate on this growth?
Absolutely. The revenue growth is quite significant, driven by a 7% increase in comparable store sales. This indicates strong consumer demand and effective merchandising strategies. Additionally, the operating margin of 11.6% highlights their focus on expense control, which has been a key factor in their profitability.
And how does this translate to their net income?
ROST Stores reported a net income of $512 million, up from $489 million last year. This growth in net income, despite tariff-related costs, showcases their ability to manage costs effectively while driving sales.
EPS performance and analyst expectations. Now let's talk about earnings per share. ROST Stores reported an adjusted EPS of $1.58, surpassing the forecast of $1.40 from 7 analysts. What are your thoughts on this, John?
This is a significant beat. The adjusted EPS of $1.58 not only exceeds the forecast, but also includes a 0.05 cent per share negative impact from tariff-related costs. This demonstrates ROST Stores' strong operational performance and ability to navigate external challenges effectively.
It's impressive to see them outperform expectations despite these headwinds.
Indeed, it speaks volumes about their strategic execution and market positioning.
Strategic initiatives and future outlook. Looking ahead, ROST Stores has raised their full-year EPS guidance. What strategic initiatives are they focusing on, John?
ROST Stores is capitalizing on their strong momentum as they enter the holiday season. They've raised their full-year EPS guidance to a range of $6.38 to $6.46. Additionally, they are continuing their share buyback program, repurchasing $262 million worth of stock in Q3, which is part of their $2.1 billion authorization.
And how are they positioned for the holiday season?
They're well-positioned with a compelling merchandise assortment and strong marketing campaigns. The company expects tariff-related costs to be negligible in Q4, which should further support their profitability.
Key takeaways. In summary, ROST Stores has delivered a strong performance in Q3 2025, exceeding expectations and raising their full-year outlook. John, any final thoughts on their investment prospects?
ROST Stores is demonstrating robust growth and strategic execution. Their ability to manage costs and drive sales positions them well for continued success, especially with the holiday season ahead. Investors should keep an eye on their performance as they continue to capture market share.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you enjoyed this analysis, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on ROST Stores' performance in the comments below. Until next time.